Putrajaya will draw 5 billion ringgit from the National Trust Fund for its fight against the COVID-19 pandemic and to cover its immunisation plan. Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz says the government has no choice but to tap the fund that is built mainly on contributions by Petronas, as its finances are nearing its limits after the 1MDB scandal. In a briefing today, he pointed out the statutory debt level is currently at 58% of gross domestic product, nearing the 60% ceiling, and the country is burdened with debts arising from 1MDB, SRC International, as well as private finance initiatives. He also said that Malaysia would likely miss its 6% budget deficit target if it does not tap into the funds, and would likely record a 6.2% deficit this year. According to Zafrul, of the 5 billion ringgit to be drawn, 3.5 billion ringgit will go towards the purchase of vaccines, while 1.5 billion ringgit is earmarked for the National Vaccination Programme. As at December 31st, 2020, the National Trust Fund had an asset value amounting to 19.5 billion ringgit, comprising 10.4 billion ringgit from Petronas and 9.1 billion ringgit in return on the investment put in by the oil and gas major. Malaysia embarked on the second phase of its inoculation drive last week, and as of yesterday, 504,165 people have received 2 doses each. This as the country's COVID-19 curve steepens again, with new cases spiking by 26.6% from April 11th to 24th. In total, Malaysia has recorded 395,718 cases after posting 2,776 new infections in the past 24 hours. 1,803 individuals recovered, taking the tally to 369,556. There were 13 new fatalities, bringing the death toll to 1,449. Top Glove Corp says it has resolved all 11 International Labour Organization indicators of forced labour, effective last Thursday. The group said this has been verified by independent UK consultant Impact, which it engaged in July 2020 to advise on measures to improve its labour policies and practices. The 11 issues were abuse of vulnerability, retention of identity documents, restriction of movement, excessive overtime, abusive working and living conditions, deception, isolation, debt bondage, withholding of wages, physical and sexual violence, and intimidation. The glove maker also gave its assurance that it would continue its efforts to improve its employees' welfare. In March, the US Customs and Border Protection said it had directed personnel at all US ports of entry to seize gloves produced in Malaysia by Top Glove. The directive came after its Office of Trade, in consultation with the US Secretary of the Treasury, published a forced labour finding against Top Glove's disposable gloves. AirAsia X intends to provide a steeper discount to its rights issue price to encourage the take-up of the cash call. The troubled carrier is planning to raise up to 300 million ringgit via a cash call from its existing shareholders and up to 200 million ringgit from a placement exercise for new investors. This is on top of a share capital reduction exercise and a proposed restructuring of some 2 billion ringgit in liabilities. AAX said in a filing today that it intends to fix the rights issue price at an indicative discount of 30% to 55% to the theoretical ex-all price of its shares. It said the issue price of the additional subscription shares will be revised to be based on the higher of either the rights issue price or 25% of the 5-day volume-weighted average market price of AAX shares, up to and including the date immediately preceding any exercise of the subscription option. The latter, it said, is subject to adjustment if any alteration is made to the share capital at any time during the subscription period for the additional subscription shares. AAX closed 5.6% lower today at 8.5 cents. Star Media Group Chairman Tan Sri Chor Chi Hyong says the group will continue to unlock the value of its land and building assets through tenancy, including listing its property on Airbnb. This is besides being on the lookout for potential partners for joint property developments, as the newspaper publisher seeks to demonstrate adaptability and build resilience in response to an evolving media landscape amid the pandemic. Chor said this in the company's latest annual report, which was filed with Bursa Malaysia today. He said Star Media will consider, at an appropriate time, the possibility of developing real estate projects for the next cycle of growth in the property development industry to increase investment yield. It will also focus on sustaining its investment in the digital space and attracting digital revenues. In the report, Star Media said business and consumer behaviours remain uncertain amid the COVID-19 outbreak. But it noted revenue has gradually improved since the fourth quarter of 2020, and drastic measures are also being taken to contain the impact. It said it has a strong balance sheet with a cash reserve of more than 300 million ringgit with no borrowings as of December 31st, 2020. This, it said, will act as a solid base to capitalize on merger and acquisition opportunities during the market consolidation and even penetrate new businesses that have a promising outlook. GDEX aims to be a pure-play last-mile delivery company with regional presence. It will also start to look into investment in real assets, such as land and warehouses, and potentially create an industrial REIT in the future. Last December, GDEX changed its official name from GD Express Carrier to GDEX to mark a new growth phase of the group. In line with the rebranding exercise, GDEX said it wants to transform its current business while building more core businesses to ensure its growth trajectory. In a corporate presentation following the name change, GDEX said it will accelerate growth in both organic and inorganic ways and develop more new segments with focus on digital and technology competency. The company will move into forwarding services, customs clearance, and the cold chain, which are very synergistic with the last mile business. From there, it can further expand into the land, air, and sea cargo business. In a text message to theedgemarkets.com, GDEX MD and CEO Tiong Teck Lin said, "This remodeling will be similar to what the group went through in the early 2000s. He said GDEX wants to be high growth again. With its in-house built IT department and investment in WebBytes, he explained that the group can also expand into cross-border remittance and even look into the financing business.